All right, guys. So now that we've learned these patterns, okay, and there are many more patterns, okay, but these are the main important ones. So there's no point confusing you further by teaching you all the patterns. But these are the most important ones as per my belief and my experience. So just try focusing on these ones, right? It will be enough for you. So now that we've learned the patterns, now the question comes where and how to use them, right? What was the point of learning the patterns if we don't know how to implement them and where to use them and how to use that to our trading advantage, right? So let's get into it. And before we move forward, I want to share with you guys moving averages, right? Now in one of the other courses, I discussed what moving averages is, but let's go over them again quickly, right? So moving averages are nothing but, these kind of lines you will see on the charts that are basically the average price of a particular number. So if I'm using the 9 moving average, then it'll be the average of the last 9 days, okay? And it will be plotted as a line on the chart. Okay, so the role of moving averages is they act as good support and resistance, right? If you see price, generally it tends to take support or resistance at one of the moving averages. So we want to use that to our advantage. Okay, so we're going to be using moving averages, and we're going to be using support and resistance to identify good trading opportunities and good trading locations, right? So, in the patterns, I mentioned that if you find a hammer or any pattern at the top of the trend or bottom of the trend, then it signals or it hints that there may be a trend reversal. Okay, but we want some confirmation, guys, right? Not just blindly if we see a hammer, so we go for a buy position. No, we want to see some confirmations first, and then we can go ahead and take a trade. So what kind of confirmations are we really looking for? Now, in terms of intraday trading, okay, we want to see this on the 5-minute time frame. Okay, we want to do this on the 5-minute time frame because that's where it works the best, right? And this way of trading is fantastic. Okay, it really gives you good moves, and it really gets you into trades at the right time. Okay, so what am I talking about? I'll show you on charts in a bit, but let's discuss it here. So let's say if price opens here somewhere. So now I have these 4 moving averages: 9, 20, 50, and 200. Okay, and these are the EMAs, guys, right? Let me put this here, EMAs, right? So you'll have SMA, DMA, EMA, WMA. I prefer EMA, which is exponential moving average. Okay, as per my experience, these work the best. So let's say now price opens somewhere here. Okay, then it goes up, and now it starts to pull back towards the moving averages. Okay, now on the pullback, let's say if I get a hammer, and if I get let's say a bullish engulfing, right? So let's say all of this is happening on the 20 and 50 EMA, right, on the pullback. So what I'm looking for is for price to go up and then pull back towards the moving averages, either the 9, 20, 50, or 200 if it happens. And I'm looking for one of these patterns, either a hammer or a bullish engulfing or a doji, or maybe even a piercing pattern. If I find that, right, that's a strong indication that price wants to continue moving higher. Okay, and we'll see examples of this. So this is one place where I want to use my moving averages. Now we can also use this on higher time frames, not necessarily just 5-minute, but this is for intraday, right? We can use this on hourly, and we can use this even on daily charts, right? Now using it on 5 minutes is for intraday, means we are going to square off our trades for the same day. Now, if you're doing this on the hourly or daily, then your horizon might be longer, so you might do a positional trade. Okay. And now the same thing can also be on the short side, guys, to sell, right? So in that case, what would happen is price would, let's say, open here, then goes down, pulls back towards the EMAs. Okay, let's say we get like a inverted hammer or something like this, and then we take a short position, and most likely price will go down. Okay, so we can do this on both sides, the buy side and the sell side. All right, now the next area to use candlestick patterns is on support and resistance levels. Okay, so let's say, we have strong support here, and then, price is trading here, then it pulls back, and on the support, we get a hammer, right? Or on the support, we get a bullish engulfing pattern like this. Strong indication, very, very strong indication that price is taking support and it wants to move higher, right? And now let's say it moves higher and comes to a good resistance level. And at that resistance level, you get this inverted hammer, or, you get a bearish engulfing, or you get a piercing pattern, whichever, or you might even get some dojis, right? Which also indicate trend reversal. So these are strong signals that price may go down. Okay, now keyword is may, right? This is not guaranteed or not necessary that it'll happen, but we are improving our odds of success by using these patterns at the right locations. Instead of just randomly trading them, we're waiting for the right location and then waiting for this opportunity. Okay, so let's quickly go to the charts and right, so as you can see here, this green line is the 9 EMA, this blue line is the 20, red line is the 50 EMA, and the white line is the 200 EMA, right? So one is a fast one is like a medium one is a kind of a slow one, and this is a very super slow one. Okay, now as I said, moving averages also act as support and resistance. Okay, so we're on the daily time frame, guys, means each candle represents one day, right? Like 26 June, then 27 June, and so on. Means whatever happened for that particular trading day from 9:15 to 3:30 is represented in that single candle. Okay, so now check this out, right? See what do we have here? Okay, so we got this pullback, right? So price was coming down, and now it starts to pull back, right? Or retrace. Okay, so while it's pulling back, right, it's coming towards the 50 EMA. And at the 50 EMA, we get two hanging mans. We get a doji, so some indecision already coming in. Then you get a hanging man, some more indecision, and followed by another hanging man. So this is a strong indication that this uptrend, this small pullback, is getting weaker, right? Is getting weaker. Price is facing resistance here, okay? And so we may see a trend reversal from here, right? And that is exactly what happened. Okay, so then price goes down, and now it starts to pull back again. Where? Same, towards the 50 EMA. And look what we have at the 50 EMA. We have this small doji, we have this hanging man, and bearish engulfing candlestick pattern. And look what happens after that. Right? So our entry in this case, guys, it can be at the close of this bearish engulfing, or it can be at the below the low of this bearish engulfing pattern, right? Just as a confirmation. Okay. So this was in terms of the moving average. Now let's look at in terms of support and resistance. So if I zoom out, can we say that, there was good support here, strong support here, and strong support here? Why strong support? because look at the bounce. Look at the bounce that we got from there, right? From this level, look at the bounce. From this level, look at the bounce, right? So can we say that strong number of buyers entered here and took price all the way up? So we can say that this is a strong support level. Now, if I zoom in, right, price started to come to that exact same support level. And look what we got here. Look what formed. A hammer. Okay. Which is a clear bullish indication, right? If you want, go revisit the video so you get some clarity. You remember our up arrow, right, on the hammer? So it is pointing upwards, and see the next day, right? See the next day. We can see from 98, it made a high of 111. Okay, so about 13 points on a 100 rupee stock. That's more than 10% in one day, guys. Just in one day. And you get a similar opportunity again, right? Another hammer right at that support level. Okay, and again, it booms, right? Now again, price comes down and forms this doji, right? And see what happens. Okay. So this works beautifully, guys. This works beautifully. Now let's go to the intraday time frame. Let's go to the 5 minute and see how we can use this on the 5 minute time frame. Okay, so we're on the 5 minute time frame, and this is the opening candle at 9:15. This is where price opens, right? So now we need to read the charts, the candles, you know, as if we're reading a book. So how do we do that? So you start off from the first candle, you know, you say it opened here and now price started to go up, right? Price started to go up, and as it started to go up, right, now it starts to pull back, right? Now it starts to pull back, it's pulling back towards the EMAs, and now finally it touches the 9 EMA, and what does it form? A hammer pattern, right? A hammer pattern. Okay. Again, what does it form? A hammer pattern. Okay, so we're getting multiple confirmations, 2 hammers on the pullback towards the EMAs, right? Now, why is this crucial, guys? See, this is telling us, as we know, moving averages act as support. And if you see a bounce like this from this support level, that means buyers are entering here, right? That means buyers are entering there to support the price, because they don't want price to go lower. They want price to go higher. So they use the moving averages as entry points. Okay, and so they enter at the moving average and they push price higher, right? So we get our signal when this hammer is formed. Okay, so we can enter above this hammer high, keeping our stop loss below this hammer low. Okay, or if you want some more confirmation, you wait for another hammer, or let's say in this case a bullish engulfing like this. Okay, so look at the number of confirmations we have here. 2 hammers, bullish engulfing, right? This is a strong signal. You can also enter above this bullish engulfing candle high and simply place your stop loss below the low of this candle. Okay, and see the blast in price, right? So this is you know how it works, and this is the beauty of this technique. Let's look at some more examples. Okay, so now I'm on Tata Motors 5 minute time frame, and today we got a gap up, right? We got a nice gap up from 121 to 126. So it gaps up and then it starts to pull back. It starts to pull back towards the moving average. And on the pullback, what do we get? Right? What does it form here? This hammer pattern. Okay, which is a highly bullish reversal pattern. So as we learned, we can enter above this hammer high, simply place our stop loss below the low of this hammer. Okay, so small risk, really tiny risk, but now look at your reward, right? See, we're entering above 126.50, our stop loss is 125.20, so about 1 rupee, right? 1 rupee is my risk, and from 126 it goes all the way to 131.50. Okay, so we're risking 1 and gaining almost 5 points if you trail it all the way. How amazing is that, right? 1:5 kind of a risk to reward. Okay, so this is what is possible, guys, with this. Let's look at another example. Okay, so this is SBI, opens here, nice big green candle on the opening, price continues going up, and now it starts to pull back. Now it's pulling back towards the moving averages, stops at the 9 EMA, starts to take support. You see buyers coming in at the 9 EMA. What candlestick pattern do we get here? That is our bullish engulfing candle. Okay, so you can simply enter above the high of this bullish engulfing, put your stop loss below here, okay, and you take the trade, right? This would have given you handsome profits. Okay, let's look at one more example. Okay, this is IndusInd Bank 5 minute, nice opening, huge green candle. Price is still going up, and now it starts to pull back, right? Now it starts to pull back, touches the 9 EMA. See how it just touches it and bounces, right? Just touches it and bounces, and we get our bullish engulfing pattern here, right? You enter above the high, put your stop loss below the low there, and you can simply book your profits. Okay, now profit booking, we'll discuss in another video, right? So profit booking and when to take these kind of trades, right? It is not good to trade this any time of the trading day, right? There are particular times that we should trade these patterns, and I'll discuss that in the next video. Okay, so I hope you guys are getting a fair idea. This works beautifully. Now you might be asking which stocks to do this in, okay, and that we're going to discuss, you know, in the stock selection part. Okay, you can also do this on Nifty, right? If you identify opportunities on Nifty or Bank Nifty like this, you can do it on that as well. All right, so that's it for this video, guys. In the next one, I'm going to discuss when to take these kind of trades. All right, so thanks for watching.